Here's another short trading setups video. This particular case, it's another ASX listed company, United Group Limited, the ASX code UGL, and we're looking at the first 6 months of 2009, just here, the first half of the year. And what we can see, if we just zoom back, is that like so many companies in the world over the first, throughout 2008, it fell very, very strongly. In fact, this stock fell from well over $20 down to lows at this sort of time frame here around the $6 mark, so significant falls in anyone's language. And why this has appeared as a potential trading opportunity is because of the strong medium-term uptrend over the last 3 months. My scanning looks for established uptrends, and this is no exception. It's moved from $7 to above 10 in the last few months, so a good solid almost 50% return in the last few months, hence why it's appeared as in one of my scans. However, upon closer inspection of this, again, we've had this consolidation. We've had the strong falls, and we liked after strong falls, knowing that we don't see V formations very often. After strong falls, we like to see stocks consolidate and move sideways. And certainly, as we move back in time through here, certainly UGL has done that. It's gone up and down, sideways movement. But just over the last few months or so, it's broken higher and continued to move higher, and of course now sitting at 6-month highs. My concern with this, however, is the fact that over the last few months, despite its break higher, it has certainly flattened out. And after having broken higher through this sort of level here, it's failed to really push on with it. And in fact, if we zoom in upon closer inspection, you'll see that just over the last week or so, some very bearish indications where we've had some very strong falls, and notice where the closes are towards the bottom of the trading range for those days. So a good strong fall here, a gap up on open, but we've sort of finished back where we started. Again, we've tried to move higher, but we've finished even lower. So we're now sitting at the lowest close for almost 3 or 4 weeks or so. So why this is of concern is because I want to trade this for the medium term, but I could easily see a potential short-term trading opportunity. And if I just zoom out a little bit, there's certainly a key level here around the $9.50 mark, and again at the $9 mark. Again, just nice round numbers. That's why I naturally just sort of tend to look towards those. I think both those levels are significant levels. And what we could see here, the fact that it's failed to push on and that it's really flattened out, is if we saw a clear break through either one of those levels, you could quite easily see this returning back to its previous range between $7 and $9. And for a person who is a little bit more aggressive and trades short term and trades on the short side, there is some potential, a lot of potential movement down below that $9 level. There's a lot of sort of area here to move back in towards. So again, we want to see a clear break below this, either $9.50 or $9. I'm not saying one is better than the other, but I think they're both significant. The more patient, the less risky I might wait for the $9 level to break, because I think you'd then be entering a higher probability trade, whereas the person who enters at $9.50 and shorts it there, perhaps a lower probability, higher risk, but therefore, of course, you're getting greater reward out of the trade should it work out for you. So again, I've picked this up because of the medium-term movement, but the fact that it's flattening out, and again, just this indication here is quite bearish, that if we did see a break through either one of these key levels, you could quite easily see this stock returning back to a level where it has been, and it was for some time, not too long ago, and there's a lot of downside here, which you could easily use to your advantage.